Good morning, everybody. Welcome to the Flow Show. Morning to K-Man. Happy New Year, mate. Good to see you back. Hope you're well.
Happy New Year, Ryan. Happy New Year, everybody. Let's make of this 2024 a very successful, healthy, and a fun year.
Yeah, let's hope so. Yeah, I don't know about healthy. I've got a stinking cold at the moment. We'll keep the year off, but such is life. We will get better on through
hanging around, mate. It's hanging in the air. But the weather has been so awful that it's not a big surprise. Everybody's ill, right?
No, exactly. I'm close to jumping on a plane somewhere hot at the moment. I've had enough of it. But yeah, first days of January, I'm already pissed off. They say it's the New Year blues, they call it, as you come off the holidays. Yeah. But, yeah. As soon as the sun pokes out, everything will be fine. And, anyway, let's crack on with things. And not a lot on the news front and whatnot. Tons of data out overnight and today. PMIs from the service sector coming out across the board, really. Australia, a little bit worse than expected, although a point and a bit up on last month, but not as much as expected, still in negative territory. Manufacturing PMI from Japan, a little bit softer. Again, beating expectations, but softer than last month. Services in China improving quite well, 52.9, so better numbers there. A lot of regional CPI numbers from Germany. The picture all pretty much the same as we see here from the early one. North Rhine coming in up 3.5% versus 3% previously. We've seen a lot of that in the CPI numbers today. France CPI 3.7 from 3.5. The Eurozone HICP number 4.1 from 3.9 for France there as well. Spain services picking up a bit as well, 51.5. So pretty much par for the course, as you can see there from all the PMI numbers there. Mostly there or thereabouts, some improvements, some little misses over the flash numbers as well. More of those regional CPI numbers there, all up a good chunk in those CPI numbers, which, as we know, the ECB bods, including Lagarde herself, has been telling us that CPI is likely to rise over the next couple of months, few months, and that's being borne out in the numbers here, as you can see. So overall, a little bit more green numbers, let's say, coming out, even though we're still in contraction in a lot of these numbers. However, the UK surprised to the upside over the flash number. 52.7 was the flash number, came in at the final at 53.4, so a bit more positivity in for the UK. We had some mortgage lending and consumer borrowing numbers as well. Mortgages applications or approvals beating expectations, 50,000. These are for NOV, so we haven't quite hit that quiet holiday period where activity in housing tends to drop off a bit. So positive numbers coming into the latter part of the year there. As always, it's important to look at the consumer credit numbers. That rose to 2 billion from 1.4 billion previously and 1.4 expected. So a pickup in borrowing by the consumer. Of that 2 billion, 1 billion was credit cards. As you know, I keep a close eye on the credit card numbers to see if there's anything going on there. So 1 billion of that 2 billion went on the plastic. That was up from 500 million previously. So it pretty much doubled. You do have to take into account the time of year, November, all those big sales events, and then we're getting into the Christmas period. We had the strong retail sales, you'll remember. So that's factoring in likely behind those borrowing numbers. So nothing that I would say is a concern right now. We're probably going to see similar in December. It wouldn't be a surprise to see similar in December. Then what we do want to see is that those numbers start dipping back into January, particularly on the credit card front. That will say that people just slapped a load of stuff on the credit card, paid it off in January, and then we go back to levels that we saw before. If we remain high January, February, March in the plastic, numbers, then that's going to suggest maybe people are getting a little bit stretched and are turning to cards to keep their living costs on those rather than paying for them with wages and normal funds. So just something to keep an eye on, but it is something that can happen at this time of year. So I'm not overly bothered about it right now. BOJ Ueda said that he's hoping wages and prices to rise in a balanced manner. He also talked about what's happening with the quake over there, or quakes over there, and so we'll cooperate with banks after the quake. We were talking a bit about this yesterday. All this might lead to more fiscal easing by the government, aided by the Bank of Japan. I've already seen some stories saying that the quakes will put a bit of a kibosh potentially on the Bank of Japan normalising. We'll have to see how that all develops. But as things stand now, and hopefully we know further quakes or damage to come, we should find that's pretty contained initially. Let's hope there's no more disastrous quakes over there. But yeah, it could mean that we get a bit more fiscal easing or emergency measures pushed towards those areas, and it's, as I say, supported by the Bank of Japan. I don't think it will derail their policy plans if they're going to start tightening or end easing in the spring. But we've had people like Mizuho saying that it rules out any move by the BOJ in January. They're probably one of the only ones who might think there was something coming in January. Your thoughts on that, Kay, and the earthquake stuff? We were talking about it yesterday, and the potential how you'd get a bit of repatriation over these things sometimes, but I don't think it's been anything that requires a big level of that at the moment.
Yeah. First of all, thoughts, of course, with all the people suffering from it. The thing is, I mean, it's nothing like the quake in 2011, right? Where we saw like massive repatriation because most of the Japanese companies, the international ones, they didn't know what was going to happen in the wake, and then we had couple of days later, we had the nuclear plant meltdown, right? So that was creating a big a big salvo of repatriations there because they were wondering how much it would take to rebuild everything, and it was really a disaster. So this is nothing like it. We did have like a small tsunami waves, but they were like lower than the expectations were. It could it could be that it delays things a little bit, or just confirming that it takes January away. As you say, perhaps some package here and there to help with the rebuilding. Bank of Japan cooperating with the government to give them cheap funding. And that's what we see in the end right now. And one extra issue on the back of this all um, is that we were in full restarting and finalizing of the safety checks for a good number of the Japanese nuclear plants. Now, unfortunately, a fair number of those plants are on the northern shore of Japan as well. I mean, the big TEPCO one in Fukushima was on the northeast coast, but there's a fair number of smaller ones, but a good number of them on the northern shores as well. So that is going to probably delay those restarts, and those checks will probably have to be redone. So that is putting, I think, an extra bit of pressure on the yen, barring, well, apart from those Bank of Japan expectations, because as we know, Japan is still importing energy, and if they could restart those nuclear plants earlier, they would rely a lot less on imported energy. But now this could be delayed, and that's an extra factor weighing on the yen right now. So it's about the picture that we see in the yen. About repatriation flows, I don't think there is a big need to have a lot of them, because it's more like a local a local issue, and more an issue for let's say the regional banks, not like the big international companies or big international banks. And let's not forget that after the big 2011 quake, they have not used up all the funds that they repatriated then. I haven't had the latest numbers, but up to last year or so, there was still like a fair percentage of those funds sitting in accounts, waiting to be put back to use. And but again, I haven't seen the latest numbers. They probably have been put back to use in other stuff, but I don't think there is any repatriation need for this particular quake situation.
Yeah, thank you very much, mate. Thank you very much. Right, I'm moving on to Fed's Barkin, and he says that the potential for additional rate hikes remains on the table. Says the Fed is making real progress on inflation and that the economy remains healthy as well. He says a March rate call is a pretty long way away. So a bit of a pushback from Barkin there. Fed minutes were out as well overnight, and no real surprises from there, reiterating the stance of the bank and where the dots sit and where the members see things happening. In a half light, you could describe them as being hawkish, but they are, as I said, a reflection of what we've already known from the FOMC, from the statement, forecasts and everything else, and hearing from various members since as well. So not really anything there to take much into account. Back to yesterday and looking at some of the data. This is the sort of thing, the NBA numbers, where you see activity in this part of the year really getting a bit funky. You know, applications down 10.7%. It looks big, but it's a time of the year. No one moves at Christmas. No one moves at the New Year. So I tend not to pay too much attention to these sorts of numbers, particularly the weekly ones in the first couple of weeks of the new year. What we did see, though, is in the ISM numbers, pretty dismal numbers, really. Manufacturing in December, it improved, but it's still negative. Prices paid came down to 45.2, so some disinflationary pressure, further disinflationary pressure coming in there. Was 49.9, so contracting last month. It's contracted further. However, employment rose 48.1, still in contraction, but a bit of an improvement on that number. So overall, not looking overly hot on there. New orders was down as well. We also got JOLTS coming in lower than expected as well. So job openings falling there too. Gets everyone worrying that the market is easing up. The jobs market is easing up over there. Although you'll note that this number lags behind other numbers by at least a month. And we've got the jobs data coming up tomorrow with the ADP later on today. So we'll keep an eye on that one. So not a huge lot to take from the data. We get the services ISM as well. Is that today or is that tomorrow? No, it's tomorrow after the NFP. So we'll get the services numbers from the US there. Just some geopolitical stuff going on. Oil markets. There's some oil fields shutting down in Libya due to protests, which gave oil a little bit of an injection in the butt yesterday. Not a big one, but given that everything that's going on in that location at the moment, Middle East and with Iran and the Red Sea and all that sort of thing, doesn't take that much to see oil popping higher on headlines. China's up. Got its new Christmas present, some new balloons, which they've been flying over Taiwan for a couple of days. You'll remember the saga with flying balloons over the US had to be shot down. Well, they're doing the same over Taiwan for 2 days on the trot. So that's been moaned about over there. And for all you Bitcoin watchers, we had some fun and games in Bitcoin yesterday. Some reports over this ETF stuff, whether it's going to be approved by the SEC and whatnot. There was a report out from was it Matrix Port or something that said it was more a research opinion piece that they said that the SEC were likely to turn it down. That actually came out on the 2nd. That report was released, but it didn't get picked up until yesterday. And when it did, it crunched Bitcoin, as you can see there, over 5,000 points, or nearly 5,000 points on that. It's recovered since, but only about half of what it lost yesterday, because there's still rumours that the ETF is going to be approved by the SEC. Latest headline I read is that they're going to be notifying the issuing parties on Friday the latest update. So maybe then we'll see what happens with that lot. That's for all you coiners that may be watching us on the show there. That's all I've got thus far today. As I say, a bit quiet on the headline front, apart from all that data. Kay, you got any bits and bobs you found on your way?
No, not really. Just a quick one on the Fed minutes. I don't see anything to really trade on the back of it. Because it was like a give and take. One could have thought that it was a little more hawkish than what Powell was saying over the meeting. But then on the other hand, they were already talking about, or mentioning it at least, that they may start to look at how to slow down QT in this year. So I think it's really a give and take. I didn't see a trade in there at all. I was sitting in front of the screen, and then I saw like, well, okay, it didn't transpire the pivot that he gave to the market, or that the market understood he gave. But also it didn't give us anything really hawkish to trade off. I think the yields are moving up and down just on the back of year end flowing into start of the year, managing balancing of the books. I think today, perhaps, or at least tomorrow, we will have the real start of the dollar market. I think the tomorrow we will have like a very big, even though today we have numbers, but tomorrow they will be the big start of the year for the dollar market, I guess. Although stuff is moving, yes, but it's moving on the back of what the other currencies are doing, right? Like for instance, the yen is one prime example, of course, and then we had those little bit better numbers in than expected out of the EU and the UK, which were driving the sterling around. But then you look at the rest of the dollar pairs, which did not have like big numbers or so. They're pretty stable, right? You look at the Aussie, well, they are giving back what they made, but they're pretty stable, let's call it that way. And you got more cross trading than really dollar trading. So I think the dollar market will start tomorrow, really for real. And then we will have a look at, you were just on there on the US 10s. We will have a look at where they trade. We are not too far away from the 4% mark. We are at 395. I think we've got the 20 BPs or so range within which is going to be relatively neutral, anywhere between 385, 86, if I saw it correctly this morning, and then 404, 405-ish, 406, and then we will see where we end up after that set of data that we get, especially tomorrow after the NFPs and the ISM, yeah?
Yeah, very much so.
On the rest, on the news front, it's been very quiet. You said, and rightfully, because I needed to catch up this morning. I was off yesterday, and and was trying to look for a reason for sterling to be relatively bid versus most things. And you said that there's a bit of positivity there on the retails on the retailer front. That may be the case, and then you see the services PMI today. Sterling is perhaps a currency that may continue to do quite okay to start the year, right?
Yeah, exactly. Yeah, that has been the case. It's not any sort of hard and fast big news.
Yeah,
Just hearing like a lot of the supermarkets reporting good sales in
yeah,
December over that Christmas period. We had Next reporting good numbers, good update. Although we had another one with less than decent update. But yeah, it's just a general sentiment thing that's going on with the UK at the moment, and as we saw backed up with that services PMI this morning, that things aren't collapsing into a fiery abyss like everyone in the press over here tends to think or say so daily in the UK. But yeah, long way to go yet. Early part of the year, we'll see what happens.
exactly. I don't think we are at the start of a trend. We're just at this. We're still to turn, right? And then,
Yeah,
as I said, I think the real market will start like tomorrow, perhaps, or even next week. Is it next week that we get the CPI, or is it even the week after? I don't recall. Um, but yeah, I mean, and I'm looking at what Ali is typing there. It's not like we are optimistic for the UK for 2024. We're just noticing what's going on right here and now, and where the market is at. And the market is trading positively towards the sterling right now. And we've had this dollar taking back what it's lost, or at least parts of what it's lost over the end of the year, which is a bit of a normal phenomenon. And now we are really waiting for the market to pick a side, really.
yeah. I don't think it's particularly anyone's bullish or optimistic for the UK so much, though. I'm seeing a bit of that, as I say, in the headlines, and banks and investors a bit more bullish on the UK. You got to remember that we always suffer from the fact that everyone's so bearish the UK. So when the
Yeah,
UK isn't as bearish as everyone is expecting it to be, then that's a positive for sterling. Doesn't mean that
exactly.
everything's rosy. It just means it's not as crap as people are expecting it to be, which
Yeah,
happens a lot with the UK. As I'm always telling you, particularly from our own news sources and press in the UK, always knocking and banging on the UK. It's going to be this bad. It's the FT. Things are going to be cratering and all that sort of thing. It's never as bad as the press says, and that's often enough to send the pound higher when it's not that bad. But going back to your other point, Ali, about the yen, when I was speaking about it yesterday, I said it's a possibility that you see repatriation depending on how much worse things get. As it stands now, it's a pretty contained situation. It's not a widespread, countrywide event like it was, as Kay was mentioning. So we're probably not seeing any repatriation, or if it is, it's very small and is being swallowed up by whatever everything else is going on. The reason why yen pairs are rallying is probably more likely the thought that if they do have to keep easing, it's going to delay them, as Kay said, and maybe push back their plans for ending easing. And that's more likely the case why we're seeing yen pairs rising. Dollar yen at the moment is
on a pair.
pushing up 144s. And how do I know that this is more likely to be on the back of the Bank of Japan than anything else? Because you look at the other triggers, you look at the crosses, all the yen crosses are moving higher. Now, why are yen crosses moving higher? Maybe it's bond yields, because dollar yen particularly tends to follow bond yields. So let's have a look at bond yields. What are they doing? Absolutely nothing. So you look at a move, and then you go and look for the clues as to why the move is happening. Now, I may be completely wrong, but I know that it's not moving up because of bond yields. So why is it moving up? Well, likely that it is the fact that maybe some are thinking that the BOJ are going to have to delay their easing on the back of these quakes. I don't know. That's my thought process. But when I look around, even looking at commodities, a potential driver, not really, or is not doing an awful lot. So yeah, I'm just putting my 2 and 2 together, like everyone else does. And the fact I've been doing this for over 30 years, my 2 and 2s usually add up to 4, more often than not. Same as the K-Man over there. I mean, do you have any additional thoughts as to why yen pairs are rallying at the moment?
It's exactly that. It's exactly that. That's what we've been saying when I said this earlier. Delay in the Bank of Japan, and I guess some of those nuclear plants risking to be delayed in their restarts as well, and that is usually if weighing on the yen. Unless oil collapses another leg lower into the 60s, and the rest of energy are going down as well, which is could be a yen positive. For as long as we stick around here, they have to pay up for their energy, and no, it's just a combination of those two things. The main one being that the market is now thinking that the Bank of Japan is going to delay its normalization. I even read somewhere that people saying like, well, they may not move at all the first half of this year, and that would be a bit of a shock, because if January was like really very unlikely that they did anything, but people were relying on March, April for them to really start normalizing. If they do delay that, then you will see the yen weaken more. It's going to be a lot has been the expectations of the Bank of Japan. So if those expectations get reduced, then you just go the other way around. That's as simple as that, really.
Yeah. And Ali, I don't know, fortunately or unfortunately, 1990 I started my career in the city. So, over 30 years ago. I wish you were talking about my age, though. I'll take that all day long. But
you started when you were 12, right?
I started when I was 4, selling buttons outside my grandparents' shop in Dagenham. That's when I first started getting into trading, shall we say. I was 4 years old selling buttons to people on the streets. They made us work young. They made us start young back then. But yeah, that's where I got the first taste of money making in some way, shape, or form. Don't know how long that lasted, how much money I made, or how many buttons I sold, but it got me lunch anyway. Right. Another thing just to keep you in the loop on is that election stuff is kicking into gear here in the UK. We've had various parties, some of the smaller parties coming out with their pledges and what they're going to do, promises for the elections. As I'm sitting here, we've got the Labour leader, Starmer, waffling on about what he's going to do for all of us at the next election. So that's all kicking into gear, even though we still don't have a date of when the election's going to be. It could be soon, it could be later in the year, it could be the end of the year. No one knows yet. No one's got an idea yet, but the campaigning has already started here in the UK. So just to keep you in the loop of that one in case headlines start dropping and popping. Chris, 80s had good metal bands. Definitely did. Right, so while we're looking at dollar yen, so here we are. It's on the march. Not what I want to see being short. 145 still is my big level up here. It's the big level that goes back quite far, actually. It goes back to what we saw around the time when we had the first move up in October. Let's put it onto a bit of a cleaner chart, maybe. That might help if I've got it mixed in there. Yep, there we go. So you can see that. But it is a historical level. Oh, let's go way back. Look, way back when. It is quite a big historical level as well. If you zoom in some of these moments, you can see it's played a part there. So it's one of those levels you keep it on the chart forever and ever and ever, and you keep an eye on it to see what happens. So in the short term, if we ever continue this move higher, that's the area. Let's go back to that one. That's the area I'm going to be watching around 145. That's going to be. If we get above there, that might just start to take to change the complexion of things. Actually, I'm going to switch back to that one because I've got a fib on that one. So 144.70s is the 38.2 of the move down from 152s. So it's going to be a pretty important test, and it comes just ahead of that 145. So if we start cracking that above there, then it might suggest we are going to be pushing higher and maybe turning around this trend a little bit. I'm still short on the back of the potential for the BOJ, but I'm going to be watching this pretty carefully. If we start moving up, I may get out of some other stuff, some of my shorts, and maybe close them up. And just in case we're going to move further up before we get to those spring wage numbers that will start dropping in probably from the next couple of months or so. But yeah, it's been a big strong rally off since the latter part of the year. We know this was some year-end stuff, but the fact it's just pushing on, continues to push on. Yeah, I don't really know what's going on with this one and why it's pushing higher. Well, I know why it's pushing higher right now, but whether it continues, I'm not too sure.
I think a lot of people are in your situation, right?
You got what? Sorry.
I think a lot of people are in your situation and your line of thought, and they need to probably manage their books a little bit now, and because it's an event, you know, one of those unexpected events that make you think about, okay, perhaps there's something that people have need to change their point of view a little bit, because every delay, and we knew that every delay in normalization would weigh on the yen before the other ones really start to move down, yeah, their yields, so their rates. So yeah, I think it's just that, you know. Quotation by, oh, okay, sorry, Ali. Okay. Always expect the unexpected. Yeah, okay. I mean, I don't know that, I don't think Richard Dennis was the one that really invented that quotation. It's in trading, from when trading existed, it's been the case. But yeah, I think that's it, mate. I think a lot of people were expecting this is the year of the yen again, and need to recalibrate the expectations a bit.
Yeah, and you've got to be quick on this. You know, I can't sit on this one as a long termer like I would others because of the carry costs involved.
Exactly.
Fortunately, when I started it, I've been chopping and making money on the dips. So you know, building up. It's almost like I feel like I'm building up a reserve against the carry rather than making profits at the moment. But yeah, I'll watch what this does. If it holds at 145, I might add back to some shorts and just if I get moved back to 144s, I'll just knock them out. Just try and improve the position, keep the profits rolling in while keeping a bit of a core. But if I need to get out of it altogether because I feel it's going higher, then I'll do so and wait for better levels to sell it and look at the timing of it as well. So yeah, definitely going to keep me on my toes this one. I think more than normal. Like
you do pay. I'm sorry.
No, go on, mate.
So you do pay 70 or so pips away a month, right? On forwards in being short on the yen. The other thing, though, that we can't completely lose sight of are the Japanese officials, right? They have been very, very quiet because the yen has been strengthening over the year end. But I was just looking at the high-low, and if you look at yesterday's low compared to today's high, we are nearly at that 300 pips mark that Kuroda famously spoke about at the end of 2022. This is starting to accelerate. So I would not be surprised if we sort of tackle or if we go and have a visit of 145 today, that we hear the Japanese officials come out of the woods again. So that is one to bear in mind. I wouldn't be blindly short yen either, you know.
Yeah, no, exactly. But I think the fact that we did pretty much 1100 pips nearly 1,200 pips from the 152s. I don't think they can moan about a few hundred pip rally at the start of the year.
No.
But like you say, they're a law unto themselves as to what they pipe up about. Kay, did you want to take the reins, have a little look around? I don't know if you're up to date on anything. Or want me to keep going?
Well, yeah, I've got a couple of things, but I will keep it very light today. I'll keep it very light today. And this one that that we would need to perhaps talk about, and that's because quite a few people in our room have entered or re-entered Swiss trades, right? Me included, although I've done it via mostly via options. And there's various interests. Some people are in the Euro Swiss, other people in CAD Swiss, myself in Dollar Swiss, and some people are in this Dollar Swiss as well. This 85, where we stopped on, well, we overshot just a little bit yesterday. We went to revisit that July low here in the Dollar Swiss, and it capped yesterday. I do think there's a little bit of a level here in the low 85s as well. But for as long as this 85 and a half, 85.60 caps, nothing really has changed. This is Swiss has been really one of the currencies that has been heavily bought into the latter part of 2023. It was, as I was saying in the room, pretty much expected that the Swiss would do well into the year end. But yeah, so we've tried to catch a knife here for this to start to trade higher again in the first part of the 2024 at least. If the market needs to screw back a little bit on their interest rate expectations for the Fed, for the ECB in the case of the Euro Swiss, the pendulum can swing the other side. We also, or I at least also expect that, or expect is now a big word, but think that Jordan may finally come to his senses. We will see the FX reserves tomorrow. That the Swiss has gone far enough. You know, everybody knows that it's been an SMB mantra over the past year and a half, really, that they wanted to combat inflation by buying Swiss franc. They went relatively neutral on their last meeting of December. But I think they will sooner or later start to say, okay, this is now enough. FX reserves are where we would like them to be, or even below, because it's been really a massacre on the FX reserves, and that's completely Swiss franc has been running in line with those. So this is one that we keep an eye on for the start of the year. As you can see, it's a daily. I don't want to go into those 30, 40 pips of day-to-day moves. We are going to look at bigger levels. So this is your intraday, really. If you want to look at the short term, if we start to move above 85, 50, 60, the prior low, that's why I left this. I should have just made it a line instead of a fib thing. Then we should start to move higher. There's going to be a lot of hurdles again, but I think in the bigger scheme of things, moving above here and then getting the confirmation above 86, 65, 70, that's going to open the door to get a retest of 88, 88.20, and that 88.20 in the longer term is my really my magic level again. It's been traded and tested and capped so many times. This is going to be my more medium-term level to see if dollar Swiss can really continue to ramp higher. But yeah, okay, Ali, you're short dollar Swiss. I think your risk is this level 85, 55, 60, right? If it goes through there, I wouldn't want to be short anymore. And if we see the European PMI is coming in a little bit better, I've also been saying that the big drag on Swiss has been Euro Swiss as well. Euro Swiss couldn't find a bid for months, right? But I do think that if you look at this little channel here, we are attempting to get back into it. It would be nice if we start to have closes above 93 figure 15. Let's call it that. Yep, figure 15. And if that would be the case, then we start to look at 94s again. If the market needs to revisit its view on ECB cuts, it will have to come from better data in the European Union, right? 2023 hasn't been a good year. Despite of that, the euro is trading a bit higher versus the dollar, but that's more of a dollar thing. I reckon if you look at overall euro crosses, they have not been enjoying too much globally. But if it starts to turn around, if those numbers start to turn around, then this one is a candidate for moving higher as well. So, and then you can overlay all the other process, CAT Swiss, Aussie Swiss, or things like that, you know. Another one that I'm keeping an eye on here is sterling. As I said, sterling has been doing well. I mean, it was expected, okay? I mean, I said I've been saying I think we could have the turn of the year could be good for the sterling. It has been good. Now we will have to see. So we had those positive PMI data. That is what we spoke about above. And now we are going to see if what's happening, because I mean European data haven't been too bad either. What's going to happen in this zone again? We'll stretch it to 85.90. Call it 85.90, 86. Wow, 05 really. 90.05. This is a zone that I'm going to monitor in the euro sterling. If we have more divergence on sterling versus European data, I do think we can have this move lower. But I'm going to really pay close attention, because if the European data, which is a bigger market, of course, if the European data start to turn around, this could possibly have a test and then start to form a base. This needs to be monitored, in my opinion. This level here already around 86. I don't know what you think about euro sterling, Ryan. I know that you're just looking at the broader ones, 85. What is it? 87, 85, 87 ish. But would you think that this is a possible scenario, that we're going to see it and then start to form a base already a bit higher, like 85, 85 and a half, 86, and then start to move higher?
I don't know. I spoke about this yesterday. If you
Ah,
look at the wider size of it, and we've just been in a bloody range for
yeah,
the best
true.
part of last year. I think there's going to be. I think the play for this one is going to be the divergence between the ECB and the BOE. And it's a bit mixed, you know. If inflation comes in soft in the eurozone, softer than expected on Friday, then that's looking unlikely with the other numbers. But if inflation does become a problem on the other side, that's going to obviously pressure the euro. And if the UK is starting to perform a bit better, then I can see this one going back down to 85. But I think you've got to play the range 85s, 87s, unless the data or the central bank start telling you that something is going to become vastly different between them. You know, if you get an 85 break, something has definitely changed, and it's probably a break you want to go with. And the same for the top side if you break through those high 87s, 88s. But yeah, in the middle here, let it do its thing.
Okay. All right. This is usually I don't go. Well, I do look at them, but I don't show them too often. I've just got on a shorter time frame here in the cable, because it's interesting. If you look at what's happened mid-December, we held the 126. Towards the end of December, before the dollar took another hit and the sterling became bid into the end of the month, we held 126. Tuesday we held 126. Yesterday, at one stage, the dollar was doing better while I was off. We again held the low 126s. 1, 2, 3, 4, 5 attempts here, and it's also a high here. It's a high here. It's trading around here. This is going to be a very, very interesting level going forward. Imagine, for instance, that this afternoon we see beats on the US data, especially tomorrow. Again, because I think personally that the real dollar market will kick off tomorrow. If we get better numbers and we get back down to 126, pay very close attention to what's happening on the cable. Okay, I think this is now your very, very interesting level on cable here to watch. 126, figure 10. Yeah, 126.10 it shows, but take it down to the figure. Okay. And the top side, we're in a bit of an activity zone here. There's also a very short-term trend line coming in, and that's all happening in this 127.20 up to 127.45. Okay, so this could already be enough for the day's activity. We don't know what the numbers are going to show us this afternoon and tomorrow, but this I think is could be a bit of a pivot area on the top side then for going into tomorrow, unless of course we break it before and we are above. It's still going to be a bit of a zone here. So we have like two pretty good levels already to monitor in the cable. If of course tomorrow's data are really bad, then I reckon start to get back above this zone and hold, then we are going to retest the 128s for the cable. And I'm looking at the clock. I think it's okay for now. I have this 145 as well in the dollar yen. It's undeniable, a big level. But I would say there's already a hurdle before. And if you look at the move lower from 152 into the end of the year, the 23.6, no, sorry, the 38.2 comes in at 145.44.70. And those prior lows here, they come in at around 144.60. So that's already a bit of a zone that I have on the shorter end. Also, and I will probably show that tomorrow. So because I'm looking at the time, we are very close to clouds on sterling yen. We are at the top end of the cloud in Aussie yen, for instance. There's a lot of activity in yen pairs around where we are, or not far from where we are. Euro yen is another one, 158.5, and then the cloud comes in around 159.30, 35 with moving averages and stuff like that as well. So pay close attention. Don't forget those the possibility that Japanese officials don't like the market turnaround, but as Ryan already mentioned, we're still well within the middle of the latest ranges on the dollar yen. And with that, back over to you, Ryan. Thanks everybody. Again, Happy New Year. Successful 2024.
Thank you very much, mate. And the same to you. Yep, I wished all our viewers Happy New Year yesterday. I can do it again. Happy New Year. That's it for today. Watch out for that ADP number later on. Don't forget to enter our NFP competition. That's up and running. Let me see if I can grab the link quickly for you, if I can find it. 1 second. There it is. I will pop that in the chat for you now. There it is. So if you haven't entered the competition, the ForexAnalytix NFP competition, you can do so there. Win a free month to the ForexAnalytix platform. 3 of those we're giving away. If you're a current subscriber, you get that added on to your current subscription. So it's open to everyone there. Have a crack at that. And lastly, before we kick off, we do have a New Year's price special running as well to join the ForexAnalytix community, where you can get all our analysis pretty much 24/7. Everyone's out and about in there, so check that out for some decent discounts there if you want to join us and get your year off to a good start. And apart from that, thank you very much. Have a great day, and we will see you all tomorrow.